Okay, just have a quick sound check. Can you see me okay? Can you hear me okay? Is everything coming through? Any echoes? I had a problem yesterday with some echoes. All good teething problems. Okay guys, well, Andrew here again. I hope you all had a good day trading yesterday. Certainly was a good fun day for the intraday trend followers, which I am one of. It certainly seems that the US dollar has been good friend to Trump at the moment. They're certainly liking all his commitments to economic stimulus, which of course is good for economic growth and inflation and so forth. And it really amazes me, these markets. If you can just zoom back a week and see where we were a week ago, prior to the election results, all the opinion polls were talking about, Trump, the possibility of Trump getting in, and the Dow was going to fall 5%, and dollar was going to collapse, and gold was going to hit $1,400. Now roll on a week. I mean, I don't know if you roll on a week and look where we are. I mean, I don't know if you were watching the election results last week, but it really was quite amazing. As Florida was coming in and Ohio, I was watching the US dollar fell from 106 to 101 against the Japanese yen. The gold was down at was up at 1360. And I look at that, and the dollar index. The dollar index was basically collapsed from where it was down to 95. I think it was trading around the 100 level, down to 95. I just want to have a quick look at that chart actually before I get into today's chat. And if you look here, I think we're at a key pivotal point in the US dollar here. We're trading back now at the par level. Now, of course, we were back here at the beginning of the year and towards the end of 2014. But this level is key. Now, if you scroll back to the last time we were here, back in 2003, this par level in the US dollar is a really key now. And obviously, with Trump now getting in, if this maintains these levels and beyond, with the bond markets crashing, you could see a whole new era of dollar strength. And I think you should be keeping an eye on that for your long-term trades. So the 100 level in the dollar index is very, very important. So do keep an eye on that. Okay, guys, I hope you had a chance to view the stream yesterday back online. If you didn't see it live, hopefully you were able to give the links to some of your friends that may be interested in trading. I'm sorry if I wasn't able to communicate back to you on in the chat room. I'm pretty new to this live streaming thing. I will get into the habit of doing two things at once, replying and talking at the same time. So I will obviously get used to that. This is being recorded as well, so you can always play this back. Jason, for those that are in Europe, was on last night, about 11 p.m. European time, 10 p.m. UK time. So do check that out. That's in the previous streams part of the site as well. As I mentioned yesterday, the purpose of these chats and huddles, so to speak, is not for you to be able to give up your day job, and become full-time professional traders immediately, but more, so that you can hopefully get to know us and get to understand certainly where I came from as a trader, been doing it for many years, what got me here today, and most importantly, why I think I can help you, or we can help you in your trading endeavours moving forward to take it to that more professional level, as we spoke about yesterday. And indeed, as I said, coaches of all professional people are really, really very important. I still have one today. I wouldn't necessarily glamorise him and call him a coach or mentor of mine, but we do talk on a regular basis, normally once a week at least. He's an old trader from the floor as well. I don't mean old in terms of age. Someone remarked on that yesterday, but old in terms of a long-term trader, like myself. And we touch base, talk about how our weeks have been, what we've been up to. And it's also, it keeps me on the straight and narrow just talking to him, really, because if I have deviated from what I am, what I know I should be doing as a professional trader, I'm almost embarrassed and ashamed to tell him. So really just, having that mentor coach for me, he's a good buddy of mine, so I don't, as I say, call him that. But I mean, having someone to talk to on a regular basis really does, help me in my trading. But I want to put my cards on the table. I am not a multi-millionaire trader. I'm not a billionaire trader. I don't have one of those jetliners with the gold-plated bathrooms. I saw that Trump video last night about his plane. Amazing. I did actually own an aeroplane, a flyer seaplane in the Philippines after I left the floor in 2000, and I was flying around in Asia on my seaplane, and that all came to a sudden end in about 2003 when unfortunately my brother crashed that. But fortunately, he lived to tell the tale, and I think he might be listening today, so I have to be careful what I say about that. But the trading lifestyle gave me that ability to sit and fly airplanes during the day and trade in the evening. Obviously, in Asia, it was great for me because I was able to trade the European markets at night time, and I'd finish doing pretty much most of my flying. Okay, but I'll tell you one of the main reasons why I think that I have achieved success in trading over the years, excuse me, over the years, I think really is the fact that it's in my DNA, it's been in my blood, it's something that I've always felt very passionate about. I spoke to you yesterday about how I got into trading, in the city, but really my trading days go back further than that. And I remember, I'll just tell you this little story. I remember trading in the city, trading when I was about 14 or 15. Excuse me a moment. When I was about 14 or 15, I had this little job in a garden centre. And one of our tasks every year was to grow and sell tomatoes. Now, as you would know, that any perishable goods, once it's been picked, does actually start to decay. So on a Saturday, we would sell all these tomatoes to all the punters that would come in. But of course, what we couldn't sell on Saturday evening, we would close Sunday and close Monday. They either went in the tip or I was able to buy them. So I used to buy these off the owner of the farm. And I used to buy them for 10 pence a crate. And I would go home, and on Sunday I'd bag all these tomatoes up into manageable bags and go around to all my neighbours, knocking on their doors, selling these tomatoes for 30 pence a bag. And I tell you, the buzz of that was the best feeling I think I ever got. That was, in fact, it must be the best ever risk reward I ever got as well, to be honest, looking back on it. But it was definitely a very, the thrill of making money. Well, it wasn't actually the money, it was actually buying something for low and selling it for high, that gave me the thrill. And indeed, the money was helpful. I remember I bought my first car when I was 17 years old, but it wasn't really the thing that got me excited. It was the thrill of turning something into a profit, and that's really what got me hooked on trading. And ever since then, it's just something that I've always wanted to do. And now that trading's so accessible to everyone, once the floor closed, there's no way I was going to go back into a full-time job on driving a taxi. Or nothing wrong with driving a taxi, by the way, so sorry to offend, but any regular job was just something that I wasn't going to go back into once the floor closed, and I was always going to be that floor trader. Now I sit in front of the screen, something that I've always been against when I was in the city, but now, of course, it's what I do, and I'm very proud of it. I'm a dad of 3 girls. I've got a 12-year-old, 8-year-old, and a 6-year-old. I play a full part of their lives, the school runs and so forth. I am actually the oldest dad on the playground now, I think, these days. Someone did in the room yesterday call me granddad, so I have to scan back and find out who that was. But so that's the life it gives me, and it's very rewarding for me, and I wouldn't change it for the world. So, as the title of today's webinar is about, we're going to talk about the runners and riders that once worked on the trading floor. And I think the reason why this is important is that most of the players in those days are still very much active in today's market. They're still there on the screens. You just don't see them as people. You just see them as prices on the screen. But the same players that opened that were trading on the floor are on the screens today, and we're trading against them, or we are them. And I'm just going to give you a brief run through of the floor. Now, you might have known, trading on the financial open outcry markets have been going around for centuries. In fact, 150 years ago, I think the first markets opened up in Chicago. The financial markets, of course, they've been trading back many centuries before that, but the financial markets opened up in Chicago first, and then obviously the rest of the world followed, as it does with most things in in the world. America takes the lead. So this was the Chicago market. Now this is the Chicago bit. You can see it at the top here. It's the Chicago Board of Trade. Okay, and this is the Treasury bond pit. Now, even to me, as a floor trader, this pit, it does scare me really looking at it. I mean, the huge size of it was really quite amazing. It's exactly the same format that all the other exchanges took, and in fact, I think we copied our format on this, or we certainly based it on this. But there's a bit of a hierarchy here in these pits, and this is a massive pit, as you can see. But depending how big you were as a trader, it determined where you stood in the pit. Now, if you were a big trader from a big size company, or indeed you were a big local trading with your own money, but you had a substantial account, then of course you had priority in the pit. So you were able to stand in the middle. And the smaller you were as a trader in terms of bank, if you worked for a bank, or indeed if you worked for yourself, the smaller you were as a trader, the further away you were able to stand in the pit. Now, there was no set regulation. There's no one that you couldn't, no one had a set rule of where you could or couldn't stand. But believe me, if you were standing out of place in the trading pit, you would certainly get to know about it very, very quick by the big players. And in fact, quite honestly, you would have been eaten alive, and you wouldn't have survived there for much more than a couple of hours once the market got busy. This pit was so vast. I understand, of course, I never traded this market, but this pit was so vast that quite often there would be prices within prices. So you'd have the main price trading, which would be the one disseminated around the world, but there's also other little markets going on within the market. So it's like a market or price within a price. But obviously the key main prices were the ones that were recorded around the world. So obviously once we got wind of this, London got wind of this, we opened up our exchange, and this is our exchange when we opened up in 1986. And you can see in comparison it is minute. There, here, and right in front of us here, you've got the UK government bond market, bond pit. He's a good friend of mine, this chap there. And this is the T-bond. That's where I lost the $100,000 just standing in there, standing where this guy in the yellow is. That's where I lost the 100,000 just when I was standing about there, and then as it progressed down. So that was the London at the Royal Exchange building in 1986. Okay, this is this is the Sydney Futures Exchange. I know we have lots of people in the room from Asia Pacific region, and this was the Sydney Exchange. I did spend a bit of time down here just on a bit of not work experience, but we went out there just to share some ideas with our fellow colleagues working at Warburg's on the floor here. Exactly the same format, just a lot smaller than we had in the UK, and very different accents, of course. But the same format, and you see the same coloured jackets as well. These coloured jackets here, the red and white. These were the that was the company called Barclays, and they were the same colours that we had in the UK. I'm going to talk more about coloured jackets in a moment when we get back to London. Okay, I won't bore you too much with this. This is the Singapore Exchange. I feel a bit of a fraud when it comes to Singapore. When the markets closed in the UK, floor closed, I should say, in the UK in 2000. As I alluded to a moment ago, I actually went to Asia where I was flying the seaplane, and part of my aim there was to convince the Singapore Exchange that they were going to go electronic. Excuse me. I was convinced the Singapore Exchange that they were going to go electronic, and I was trying to promote an electronic trading platform to enable all these brokers and traders to get used to trading electronic. Well, you can imagine I wasn't too popular in the bars around Singapore. Nick Leeson was hanging out there. You might have heard about him. If you haven't, maybe you should Google him. But yeah, the bars out there, I wasn't very popular with all the traders out there because I was basically about to take all their jobs, or trying to certainly get them ready for losing their jobs. They eventually, to be honest, they really stuck to their guns, and they didn't go electronic for a good few years. In fact, I ended up having to leave there in about 2003. I'd blown all the money that the UK PLC had given me to set up Asia Pacific, and we had I think I'd spent about $5 million or something on setting up the Asia Pacific company, and and they didn't go electronic. Singapore stuck to their guns and didn't go electronic until after I'd left, so I basically missed the boat on that by a couple of years. That's another success story. Okay, and this is the LIFFE market back in 1992. This is basically as big as it got. This was like the end of the LIFFE era, if you like. So you can see how it had grown. I showed you the video yesterday of a bit of a snapshot of it, but this is basically how it ended up looking. And I go to the summer again. So look what happened in 6 years. 6 years in London, we went from the small little LIFFE floor on the left to where we are now in 1992. A big change, as you can see. Okay, now I want to talk to you about the different styles of players, the runners and riders that were in the pit. Now I'm going to put this, I hate doing presentations on PowerPoint on webinars and seminars, and when I do public speaking, because people tend to lose a seat. But I want to put this screen up because I'm going to be referring to some of these people, and I want you to see who I'm talking to, so that you can gauge exactly where I am. So basically, there are 4 different types of players on the on any trading floor. Now, this pit here is the UK government bond pit. This is the gilt pit. In fact, the back of the screen, in fact, there's 2 pits here. This here is the gilt pit, and here is the short-term interest rate pit. They call it the short sterling pit. It's like the T-bill pit. So it's short-term interest rates. It's basically controlling. It's basically the pit that focuses on short-term interest rates. So this is the UK government gilt pit here. Now you can see the different coloured jackets. As I said a few times now, the different coloured jackets represent the different companies. Here you'll see this blue green jacket here. This is JP Morgan's. JP Morgan's. Next door to here you have G&I. Kite here, you see clearly Kite. Kite was a local firm. I'll talk about those in a moment. The guys in the red jackets, remember these are the locals. Not many in here today. They're either down the pub or out doing whatever they do. But these different coloured jackets represent the different companies. And here you've got Goldman Sachs in here at the end. Goldman Sachs were a very big player on the floor there. These are the guys. Now, actually, talking about hand signals yesterday, when you're hand signaling, as I mentioned yesterday, you're talking about price and you're talking about quantity and you're talking about going down the Cannon pub at 12:30 and all that. But all the different companies, they also had symbols as well. So when the guy on the edge of the pit is signalling back to the guy on the phone what's going on, he's signalling back the names of the companies that are doing things. So if, for example, Goldman Sachs were doing something, typically the hand signal would be you'd point to the ring, or you'd point to your ring finger. So that represents gold. You'll see here in the screen you've got kite. Okay, kite. The typical symbol for kite was like that, like flying a kite. Shearsons here. These people in the blue here. This is Shearsons. So Shearsons were like that. Now, people in the UK might appreciate the next couple. You had Lloyds Bank. Lloyds Bank are in the green here. Lloyds Bank, we used to do this. So that's like the symbol of riding a horse. And anyone that knows Lloyds will know they're symbolised by a black horse. Midland in the late 90s or late 80s, early 90s, the Midland Bank, before they joined HSBC, their logo or their slogan was the listening bank. So Midland Bank would have been that HSBC. There's another one that we used to use, and there's a company down there called Horgavet. Horgavet was symbolised with, and I'll leave that one for your own imagination. But all these different companies basically had different hand signals to recognise, which we recognise them by. Okay, so whatever pit you had in, basically you had the different formats. Now we've got here the main. Excuse me a second. Just taking a message from someone. Okay, so basically we've got here the different styles of traders. You've got the brokers. Now the brokers are order fillers. Order fillers basically are taking orders from the fund managers, the investment bankers around the city, and they are basically filling orders. Remember, I said yesterday when I was filling an order that she said 10 and I said 100 and what have you. I was filling an order for a client, for a fund manager. I still to this day don't know who it was, but I was filling an order. So I'm basically getting paid, for doing, order filling. I'm doing whatever I should be was told to do by the customer. I wasn't actually making my own decisions. Now, the fact that you were an order filler, a broker, still didn't mean you were insignificant. The order fillers and brokers down there, at those days were earning vast amounts of money. Now, the money that was flying around for these people in their early 20s was really quite huge. Now, and I was not a big flyer. I'll put my hands up. I was not, one of the biggest flyers and brokers down there, and I must say I wasn't one of the best brokers down there. You had people that were, so sharp, so much sharper than I was, and certainly. But if you were sharp, you earn a ton of money. I remember though, for example, on my 21st birthday, or just after my 21st birthday, it was pay review time. My salary at the time, and I remember it vividly because it was the biggest increment in pay that I'd ever received. My salary at the time was £18,000 a year. So I went into pay review time. Everyone's discussing what we think we're going to get. We knew we were in for a good year. Investment banking was going through the roof and so forth, and it had been a great year for us as brokers on the floor. So I went in for my pay review, and just after my 21st birthday, and my salary jumped from 18,000 to 40,000. I sat there in front of the two bosses, 18,000 to 40,000. They gave me a company BMW convertible and a £50,000 bonus, and that when I was 21. So that's almost 28 years ago. I got a £50,000 bonus just for having a good year on the futures exchange. I remember going home to my parents that evening, and as I said yesterday, my dad was quite a successful businessman in his own right. And I went back and told them what had just happened to me. And he shook my hand and said, "Okay, mate, I take it all back. All those years ago when I said you shouldn't leave school with no qualifications, put my hands up. I was wrong." And indeed, he was wrong. But it made us very proud to be part of that. Now, the other type of trader that you have down there are the locals. Now, I've alluded to those. These were the guys in the red jackets. Now, these put their own money up into their trading accounts. Now, these, if you've seen them on the YouTubes and the news in the past, these were the serious players. These were the multi-millionaire traders. Now, it wasn't uncommon for some of these guys to be earning $50,000 to £100,000 a day. When I say earning, I'm talking about making 100,000 or losing 100,000, in a day. And for us, we're on good salaries, but to hear that we used to hang out with these people. It was just it was like a different world, quite honestly. Now I spent 6 months as a local between leaving Warburg's and joining Swiss Bank. I spent a short time as a local myself, but I was a very quite a small trader. I had a £50,000 account, and I was making good money. I was making £300 or £400 a day, which in today's standards is still very good. But the lure of the corporate life and the money that you could earn, that I was certainly earning as in the corporate world, getting paid salaries with less stress. I meant I could basically sleep on the weekends. It was too much for me, so I basically went back to the corporate world, having spent 6 months basically as a local. But these locals as well, these were big names in the city. They were often they were known because obviously whenever we were trading, the person on the squawk is shouting down who's buying the market. It could be someone like here you see on the screen here. You've got Kite. He was a massive guy. He's still in the city. I think he runs a trading floor now. You might even be watching this at some point. If he was buying the market, his name would be shouted down the squawk lines. David Kite buying the threes. He's buying the fours, 5, 6 trading. David Kite buying. So these locals became known, as big as the banks, but quite honestly, as big as Goldman Sachs and JP Morgan's, and quite honestly, they would take on Goldman Sachs and JP Morgan's. I mean, there was a local that used to. I don't know if he's going to ever catch up on me on this, but I'll tell the story anyway. There was a local that used to be in the BTP pit. Now that was the Italian government bond pit. Now he controlled that market. You know, you had all the big banks in there as well, the JP Morgans, Goldman Sachs, us, Lehman Brothers. We were all in there. But basically, he controlled that market. He moved that market wherever he wanted to. Now, going in there as an order filler, as a broker, was quite honestly like going into a lion's den. You know, if you messed up in there, you could lose your entire month's money, you know, for the floor. The $100,000 that I lost on that hand signal could have been insignificant if you messed up in that pit with him. He, you know, when you're trading, you've got to keep your market on the got to keep your market up. I'm 2 for 5, 2 for 5, 2 for 5. If you turn around and start talking to someone else, or you start talking to your mate about the weekend, and you forget to keep your bid up, and he starts trading 1, your customer is going to demand that he gets his filled at 2, because now 1 is trading, 1 is going through all the screens. He wants his market filled. He wants his order filled because it's traded through his price. So all of a sudden, you now as a broker have an exposure. So going into the BTP pit was absolutely, it used to give me gut wrench when the guy my guy on the phone would say BTPs. I think, oh, here we go. How much can I lose to do today? Thankfully, I didn't get caught. I don't know. He seemed to take a liking to me anyway, so he was always quite nice to me. But some people, if he didn't like you, he was able to control that market, and it was really quite scary. So the other type of trader we have down there are the corporate locals. Basically, these are the guys and girls that are trading. They're locals, but they're trading with the corporate money. So they have discretionary traders, I suppose you would call them, where they can buy and sell at their own views and their own decisions, but they've got the bank money behind them. Now, of course, they had limits. They had trading limits that they couldn't exceed. But because the trading was a bit different in those days, as I'm sort of getting around to, when we used to trade, let me show you. When we used to trade, we used to put our trades on these order cards. So you can see here my order card. It's a sell, Andrew Lockwood sell order, and you can see on the side there, the other side, that's a buy order. That's if you can see that. I can't see, the screen's delayed here, so I don't know what you're looking at, but hopefully you've got that. So you'd put your trade on the card here, and you'd give it to a yellow jacket to type into the system. And it's only then that you gave to the yellow jacket, to the admin person that typed it into the central processing, that your trade became registered. So if you had overgone your trading limits, and I'm not saying that this ever happened, but if you were to overgo your trading limits, well, then you just keep your card in your pocket and not put it into the system while you try and trade out of that position. So there's none of this, visible, no one knew your positions until you actually either got dragged out by your clearing member, because all these people were coming up to you saying, where's the other side of the trade? You either get dragged out by your hair because you've been holding the cards in your pocket, or you'd wait until you put your trade in. Now, so a lot of these corporate locals, they had their limits. Now, I don't know if they overstayed their limits. I mean, I'm sure they did, I suppose. But that's basically, how it worked. Now, these guys were on huge amounts of money. These were on huge bonuses. Now, quite honestly, they never really told you, the amount of money that they're on or the type of bonuses they got. But it wasn't uncommon. In fact, I remember he's in that video there now, in that screenshot now, and I'm not going to point him out to you, but I remember not standing beside him, but he was in the pit and he was showing all pictures to everyone. He was a corporate local, showing pictures to everyone of the 355 Ferrari Spider that had just been delivered over the weekend. Now that car's worth £400,000 at the time, and he was showing everyone the car that had just been delivered over the weekend. Now he was a corporate local. He was down. Chances are he was on a big ticket, and he'd obviously had a great year. So those were really rich, successful locals. I am just going to tell you now I've got on the subject of hiding cards in the pockets, about what you could do in those days that you can't necessarily do today. And it's what I famously call the trade to Rio. Okay, this is a real true story, and it's something that when I'm out talking to my friends and people that don't know about the market, I always recount this story. It's a really great story. One moment. So this guy, I'll mention his first name because it doesn't matter. But anyway, his name was Trevor. He's a really good buddy of mine on the floor in those days. And he was what I would consider a small local. When I say small, he was basically about the same as me when I was a local. So he was trading maybe a £50,000 account, maybe not even as much as that. He would never divulge. You wouldn't divulge that type of information. But I knew he was a small trader in terms of the fact that he was only doing 2 lots, 5 lots, maybe 10 lots on occasions. Now, you may remember George Soros. George Soros was the guy that basically broke the Bank of England. And this was back in 1988, I think it was. 88, 89. The UK sterling at that time was in something that we call the ERM, the exchange rate mechanism. And that basically put a floor on sterling, pretty much like the Swiss had couple of years ago, pegged to the dollar, pegged to the euro. Sorry. So we were pegged to the currency would not go below the basket of currencies. So George Soros had basically said, okay, you put a floor on sterling, we'll just see about that. So he used all trading mechanisms to take advantage of that. He started buying puts in sterling. That's basically the right to sell. So he was basically going short sterling in every possible way that he could. And sure enough, the market pressure was building up that day. I was in the trading pit as well that day. It was the most chaotic day I think I've ever experienced on the trading floor. Anyway, the markets obviously got wind of what Soros was doing, and their markets were just going amazing. Now, interest rates at the moment, in the UK are 0.25%. Historically, at that time, interest rates were at 10%, quite high interest rates period that we were going through at the time. But interest rate moves, they might move, if they were going to move, they might move 0.5%, they might move down 0.5%, as opposed to now we're moving in tenths and quarters. But interest rates were then moving in 0.5% times or even sometimes percent. Trading short sterling, you would be trading the interest rate market. So if the market interest rates move by 0.5%, that's 50 points in the short sterling. Or if it moves 1 percentage point, the market would move 100 points. So the Bank of England, it was Norman Lamont at the time. He's still on the newswires now and again, mad chancellor. Norman Lamont was the Chancellor at the time, Chancellor of the Exchequer, and he started thinking he would take on George Soros and start, or certainly trying to protect the pound by moving interest rates. So he moved interest rates from basically 10% up to 15%, like that. And then back down to 10%, and they went back down to 5%. He was moving interest rates down at 5. I think he made about 6 or 7 moves throughout the day on interest rates. This is the benchmark interest rate. He was moving it in clips of 5 at a time to try and take on George Soros. Now, Trevor was trading short sterling. He's on a small account, remember? And I'm a broker, and I'm talking to clients as well. I'm running in and out. He's come up to me and goes, Andrew, what the going on here? What's going on? I said, he goes, I'm in real problem. I said, what's up? He goes, I'm down £250,000. So he's down £250,000. He's got his trading cards in his hand. He's not put them into the matching system, so no one knows where he is. He's either got he's either puts them in and he gets pulled out and mostly gets, thrown in jail. But he's trading, and he's keeping his cards before he's putting them into the matching system. I said, what are you going to do, Trev? I said, you've got to get out of your position. You've got to cut it. You've got to cut it. It can get worse. What's going on? No one knows what's going on. And he goes, his words were, F you, this is trade to Rio, mate. Trade to Rio is what he said. And he went flying back into the pit. And I didn't see him for the rest of the day. I mean, it was just a chaotic time and what have you. The trade to Rio, that's Rio de Janeiro, basically meant he either makes his money back in the next half an hour by trading out of this position, or he's on a jet plane and he's flying off to Rio de Janeiro and you'll never see him again. So that's what the trade to Rio was, and that's what I call it. It's one of my fondest memories of the floor. I met Trevor in the bar that night, in the Cannon, would you believe? Met him in the bar that night. I said, Trev, how do you get on, mate? He was 75 grand up on the day, and it was just, we had hugs, beers, and I even get goosebumps now when I talk about that story. It really was one of the great ones. Okay, so they're the corporate locals. Then you have what do we have now? What have I talked about? You have the corporate locals, the brokers. That's basically then you have the local traders that are basically trading for other people's money. So you might have someone like, I've mentioned it here on the screen here, someone like Kite Now, David Kite would sponsor lots of other smaller locals. That's how a lot of the young kids got out of their school at 16, 17. He would be able to spot them. You didn't need to have qualifications. You get spotted by a decent guy. A lot of them were from a place called Essex in England. A lot of them were mates, someone that could stand up for himself, give him a trading account, give him some money to trade, and he would sponsor you. And obviously he would take a proportion of your profits. And that's basically, that's a bit like I suppose what we do with the signal service when you follow people like Gold Star and so forth. So basically, they're trading. He's trading his own money, but you're basically following what they're doing. So basically, David Kite is sponsoring them, to trade, and that's how a lot of people got into into being a local. I know I'm rambling on. I'll cut off soon. One of the key, trading on the floor was really, it was a whole different type of character that went down there. And as you see, when you start as a trader, you start basically as a yellow jacket, and one of the initiation processes of trading, of becoming a trader, is basically a prank that we used to play on all the youngsters that came onto the floor, and it was basically the long wait option. So a new trader would come in, yellow jacket would come onto the floor, and he would he'd be told by his head trader, go into the option market and get me a price in the long wait option. So that's long wait option. Well, of course, the young rookie guy there would sit there and stand by the edge of the option pit, and he'd ask the trader, can I have a price please, mate, in the long wait option? Well, I think you get the idea what basically happened. There was no such thing as the long wait option, but what the trainee got was a very, very long wait. And he'd be there for hours and hours, and the bloke on the phone would say, come on, get me the price in the long wait option. And of course no price would come, and but the whole exchange knew when this was going on. So although they might be trading in their relevant pits, you knew that some guy or some kid was being put up to the long wait option. Eventually when the trainee clicked that he'd been had, the whole floor would erupt into applause and jeering, and many trainees left the floor on the back of that and were never to be seen again. And you knew then that they couldn't cut it. Chances are, if you were to cut it then after the long wait option, chances are you were able to make it as a trader, because that was quite an daunting place to work. It certainly wasn't a place for the weak and insecure, the futures exchange. The fast humour, the wit down there was just really, it was just second to none. We were known as the Champagne Charlies of the city. Quite often referred to as Maggie's boys, which was part of the Thatcherite era, because our Prime Minister at the time was Margaret Thatcher, and we were known as the Champagne Charlies. So everywhere we'd go outside of the exchange wearing our coloured jackets, we were sort of like the city celebrities, as it were. But of course, not all stories, not all fairy tales end in a happy ending, and nor did the life market, because all this changed at some back in 2000, and a lot of the traders that were on the floor, they tried to get into the pits and into the electronic trading. Some migrated to it, myself, a few others. Some tried it, some lost an absolute fortune. I'm going to tell you more about that tomorrow, of some of the sad losers that got caught along the way. But it really was, a place that when it changed, it was a big culture shock to a lot of the people. Another thing on the floor, a lot of us, we all had nicknames. We all had nicknames. Anyone that was like a known character had a nickname down there, and I won't go into all the nicknames down there now. Now, without blowing my trumpet, I was a pretty known face on the floor, and I had a nickname. And every time I used to go into a new trading pit, they'd all chant out my name. Now, some wisecrack decided to put my name my nickname into a song. So anytime I'd walk into a strange pit that hadn't seen me for a while, if I might be going into the German Bund pit, or if I go into the Euro dollar pit or the FTSE pit or something like that, the whole pit would normally erupt into my theme tune, my song, before I get in to say, you know, what I was going to do for the day, what I was going to do in the pit. Now, I'm not going to tell you what my nickname was. If you want to find out, you can, of course, message me, follow me. Why don't you follow me on the Forex Signals, and then I can share that with you. But I'm not going to put that on a public domain. Certainly not worried about sharing it, but we can do that on a personal level. I've rambled on a lot longer than I intended to. I'm sorry about that, but once I get talking on the futures market, it really was a defining period of my life that changed me and made me who I am today. It's what I do now, sit here trading. So I love this opportunity to be able to talk about it. Now through tomorrow, bit of tomorrow, but then Thursday, Friday, and then next week we're going to get into a bit more about really what screen trading and trading in general is really like. I might refer back to the futures market on occasions, but I'm not going to be going in too much more about the about the live market. Let me just put that screen up so I'm not missing anything. So we're going to get more into the education side of things as the week progresses. Now tomorrow I am on. What time am I on tomorrow? I think I'm on at 2 o'clock tomorrow. 2 o'clock tomorrow GMT. Yeah, 2 o'clock tomorrow GMT. And I'm going to be talking about what made the markets very different and what basically I had to do to change to become a screen trader as opposed to a floor trader. So I'm going to talk about that. We're going to talk about the key aspects that are now very, very different. Sitting in front of the screens, you have to change the way you look on things, and that's what I'm going to talk about tomorrow. So that is it. That's tomorrow. That's 2 o'clock. Jason is on later today. I don't have his schedule with me at the moment, but I know it's on the website. So do check that out. Do pay attention to him tonight. He's got some great information as well. I'll be in the room later today, so ping anything over to me. As I say, don't forget to follow me. I want to get my numbers up to 100 by the end of the week, which is good. Until tomorrow, I'll see you in the room. Until tomorrow, I bid you good day.